You're having a great day, and if you traded today, we're very successful. Um, First off, I want to apologize that it's a bit of a later video today. I've been traveling all day and just was able to get to a desk to make this video. But as always, I'm going to be going over the S&P 500 E-mini futures for today, June 6th, 2025. Interesting day today. Like I said, I was traveling, so I kind of had a sniping mentality today. I was only going for 5-point little snipes, and I ended up having a really good day. Definitely left a lot of points on the table, but that sometimes happens. But I'll get into that when I talk about it. As always, purple lines are the previous day high, and then the pre-market high and low are these orange lines. And then I'll get into the red line of resistance and green line of support once we get there. We start off with a great 4-bar micro channel with two massive micro gaps with honestly almost every single bar closing on its high. And I think a lot of traders probably got really trapped in this trade, buying the close, maybe buying the close of 2, buying the close of 3, and even buying the close of the pullback or implied pullback on 5. As you can see, that was kind of a perfect 30% level. Looks like pullback failure. Definitely seems like a second leg is coming. But what most traders probably forgot to realize is that looking at the Globex chart, this was already a third leg up. So in the Globex chart, you can see there's clearly 1 sideways, 2 pullback, 3. So do you want to be trading anticipating a fourth leg, even though it is now the new day? No, you just have to use the tools that you have. You gotta, before you enter in trades, you gotta look at the 15-minute chart, the 5-minute chart, the Globex, everything. So interesting 4-leg microchannel up. Could have definitely gotten some more momentum, but just not part of my system after seeing the 3 pushes up consecutively. And then it goes kind of sideways into a trading range. As you guys can see, you kind of get 3 pushes down, maybe 4 for the bears. Really respecting some of these levels. Trying to push back down to the Globex high, isn't able to push back through it. Kind of still just going sideways, trying to decide whether it's going to continue this upward trend that it started the day off with, or maybe get a reversal. And then you see it gets a very deep reversal on 21 and 22. A lot of traders probably would think about taking this trade. I know I did. But the key thing and the reason that I didn't take this trade, even though 22 is an absolute rip down with a massive micro gap going for over 21 points, definitely a huge distance factor there, is that I was looking at the 15-minute chart while I was thinking about taking the short. And as you can see, it pushes very, very deep down, crosses the 15-minute EMA, and it gets a strong, strong rejection with a very long wick on the 15-minute chart. And that is included with the wick that it gets on 22. It gets a very strong rejection. 23 even tries to climb lower and still tries to cross the EMA, and it gets a double bottom, very strong rejection up. So I think there's a lot of hypothesis on why you wanted to sell 23, expecting it to go lower, but I think once you saw 24 or 25 not really getting much momentum, it would have been a clear try to get out, break even, maybe on 26 or up a couple points. But I didn't take that trade. And then you kind of get this big push down, and then you get a reversal, 3 pushes up, but kind of sideways into the trading range. And this is when I started to marking out kind of the high of the trading range, and then I'll get into this low, or I marked out this low. Clearly not trying to get past the 15-minute EMA going short. And it kind of gets 3 sideways pushes up in this trading range. 1, pullback 2, pullback 3. And then it kind of sits at this top of the EMA, not getting a bunch of push off of it. Kind of reaches the previous day high, pre-market high again. Kind of rejects the previous day high. And then clearly gets a good 3-bar microchannel push through the EMA. And as you can see, I had a sell order at the EMA after this 3-bar microchannel pushes down. And yeah, it's not a huge momentum mover. It's only 7 points down at its absolute peak. But I just thought, this is pretty exhausted. It already has 3 pushes up. It clearly exhausted. Good double top. Good trend reversal with strong IBS, and then it gets two follow throughs that are trying to pull back through the moving average and aren't able to do it. 37 also tries to pull back through the moving average, isn't able to. So I sold it. And like I said, I was just sniping or scalping, you could say today, but I was just trying to go for quick trades because I wasn't kind of in the place or the mental place, or, I didn't really even have the Wi-Fi to be able to stay in longer trades. So I just got out for 5 points on 38, a quick scalp, and then it ends up getting, three pushes up, trend reversal, three pushes down, one pullback, two pullback, three. And then it really tries to test this bottom of the range, and you can continuously see there's a ton of rejection. And you can tell 42 is a give up bar. And with this double top here, I really thought that there was probably going to be a lot of upside momentum. You get three pushes up, kind of fails, and then you get three pushes down, and then a lot of exhaustion. So I really had the hypothesis that this was probably going to rally and try to get more up. So I bought 42, kind of expecting this double bottom and seeing it at the bottom of the range, thinking it was probably about time for it to go at least sideways and up, trying to test the top of the range again. So now I had this clear trading range marked out, and I was really using that to my advantage. So I was trying to catch a leg one, which isn't something I've done before, but I've done some back testing on trying to catch kind of double bottoms and double tops, definitely at the bottom of a trading range. Try to catch a leg one, and then you can even scale in on the leg two and make a really, really good profit. So I tried to get in on 42. I didn't really like where 43 went. So I got out break even on 43, and I just continued to watch, and it continued to try to push through the trading range, the bottom of the trading range, the wick of 23, and it continued to reject it. So once 45 had a really good close with strong IBS, I bought the close of it, expecting this to have be the first leg kind of in this exhausted three pushes down, maybe a trend reversal, trying to test the top of the range next, or might go sideways. Like I said, I was only looking for 5 points, so I wasn't really thinking about a long distance factor kind of to the top of the range. I was just thinking it would probably get some pushes up. So I bought the close of 45, and then clearly I should have waited. I took my 5 points at the EMA, but if I would have waited and seen this close of 46, I would have stayed in and been able to make probably close to 40 or 50 points on this trade. But I just was, like I said, I was traveling, so I wasn't really locked in as much as I wanted to be. So I just made 5 points on 46. And this is clearly a first leg up, and it gets a close above the EMA on 46 and on 47. So I got on the close of 48, expecting a second leg up. Like I said, this is where I get into, I could have caught this first leg up, scaled in on 48 to catch the second leg, and then let it ride. And we're looking at 40 or 50 points at least. Very, very strong places that I entered. But yeah, I caught 5 on 46, and then the pullback of 48, pullback failure, expecting a second leg up, 3-bar micro channel. And then it gets its second leg up, and I took another 5-point profit on 51. Like I said, I was kind of just sniping today, wasn't trying to go for massive trades. And it did exactly what I hypothesized. It was exhausted at the bottom of the trading range, and then it gets 1, pullback 2, pullback 3, about 4 pushes up to the top of the trading range, rejects the top of the trading range. You get kind of a bit of an implied double top here, and then it pushes again kind of three times down. The only other trade that I saw that I didn't take because I didn't like all these doji wicks on 62 through 64 was that using Fibonacci, you could have measured this and seen that 65 was a pullback to about the 55% level. I don't love the wick on 65 too, and it closes with really strong IBS and a really strong close. But if you were feeling risky and needed the points, you could have sold and kind of sat through about a 2-point loss, and then it would have ended up dumping, and you could have probably made 5 to 7 points. But like I said, the rest of the day it kind of just touches the top of the trading range and then just kind of goes sideways and down, crosses the EMA again, but kind of gets some rejection. The last 30 minutes were very volatile. But yeah, that was my quick analysis of today. Once again, I'm sorry it's a little bit later. And I forgot to say, huge shout out to Al Brooks. His course will be down below, as always. And a huge shout out to Troy, my mentor and teacher. If it wasn't for him, I wouldn't be trading. Thank you guys for tuning in. If you made it to the end of the video, as always, leave any comments, questions, concerns down below. and have a great weekend. I'll be back next week with videos every day.